Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1052nd edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Traders, again, the 1052nd edition of these educational videos. These videos are to teach you the art of technical analysis and how to apply it to the markets moving forward each day. This video is being filmed on Monday for Trading Tuesday. That would be July 30th, 2013. It may be good into Wednesday as well. We will see. Traders, there's another 1051 other educational videos at livewithoscar.com. So come on down, come to our free chat room, and take a look at those educational videos. What do we have? Well, we know this. Futures trading is risky and can cause substantial financial loss, and we know futures trading is certainly not suitable for all trading accounts. Traders, here we are, Monday night for trading on Tuesday. This is the UST bond market daily bar chart. It has bear flag syndrome. I've shown you this chart in many videos. Bear flag 1, 2, 3, 4, 5. Each bear flag produces a drop. Bear flag gets formed and a drop produced, right? Bear flag, a drop ensues. Bear flag, a drop ensues. Bear flag, drop ensues. Here we are, bear flag, a drop ensues to where we are right now. After a sixth bear flag formed, I showed this chart to you once again a few weeks ago. And I said, look, another bear flag. And we fell out of that bear flag. And now we are in this one, a seventh bear flag. But here's what I find interesting. A seventh bear flag forming right when the FOMC or the Fed is going to have a meeting tomorrow and Wednesday. This flag's perfect. We can go up and stay inside the flag, move up a little bit, and fall right out of the flag on Wednesday after the announcement. That's what generally happens with these bear flags. Bear flags usually produce market drops, right? They don't last forever, but these have been consecutive. Over and over again, they have worked. They've been consistent. So I think the bear flag will bear some fruit, if you will. So keep an eye on bonds. You got an FOMC meeting. I don't buy it. I think this is a bear flag that takes us right down. I wouldn't expect anything more than a sale of rallies out of bonds, but always remember to keep your stops in. So that's the way the bonds look. Now for trading on Tuesday, July 30th, let's go look at the indices. Traders, I'm sorry, but breaks about face in the U.S. indices. We are going to have at least a one-day breather here. Now, I'm not sure if it's going to be a one-day breather or if it's going to lead to a couple of days, but I will say this. This is a very troublesome formation. Just look at the formation before I do this. This is troublesome. Why? Well, right here, you would say, well, that looks to me like a bear flag forming, right? I would have no trouble calling this a bear flag, and I'd say, yeah, absolutely, that's a bear flag. Well, if that's the case, well, then let's look at this again. You have a right shoulder, a head, and a left shoulder. I'll tell you what, I'm a little bit worried because the last time we seen action like that was here, and look what happened, traders. We had the same sort of look. And if you look right here, you've got your flagpole with these 2 days, right? This one and this one right here. And you had a flag build. The whole thing, to me, if you asked me, was a flag in the right shoulder with this one anomaly, this one-day anomaly here. But basically, this was a flag, and the market dropped. Now, the market dropped. You know, you can almost see where it was going to go based on the size of the shoulder. It went down to about here. So I guess what's going to happen here is if this is a right shoulder and a bear flag, we should drop a little bit out of this bear flag down to here. I'm not calling for any sort of a big spill off or anything else than a downward start to Tuesday's trading. Whatever that turns into, it'll turn into. We've been bullish for quite some time. We were blessed with calling it bullish on Monday and getting that right. We got in at the lows and out at the highs. But this is for Trading Tuesday, a brand new day. On Tuesday, I suggest if you do short the market with OMNI, that you be very nimble in your trading. If you are going to sell this, please be nimble. Get short, get out, and stand aside, because I don't know if this is the beginning of 5 days lower or a half a day lower, but I do know this. Two-day Fed meeting starts Tuesday and Wednesday, tomorrow and Wednesday. Perfect timing for the market to pull back right before the meeting's over, so this market can blast off and go to the upside while the bond market turns around and heads for the downside. So that would be my opinion for after the FOMC meeting. But for tomorrow, sorry to say, this is our Omni, at least for the start of trading on Tuesday. Traders, thank you so much for coming to my 1052nd video. I hope these videos are helping to keep you in tune with markets. These videos are here to help teach you the art of technical analysis and how to apply that art moving forward each day. Come on down to livewithoscar.com and meet me in my free trading rooms. Always remember, keep your emotions out of trading. One of the best things you can do to help yourselves with keeping your emotions at bay is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, thank you so much for showing up to these videos, and come to livewithoscar.com and allow me to teach you to be a better technical analyst.